open it, then you have to carry that account for the next transaction. It's not like that here we make a new the service revenue account. No, we already opened it, so we just post it accordingly. So basically, background is this is book. We already record 7,000, and now we are recording against fifth transaction 3,000, right?
But what if the service revenue is not the same? Still, you can post it down.
It's not the same. Yes, it's not the same. Previously, it was 7,000. Now it's 3,000. It's not the same.
No, the name of service revenue is different. Like, for example, we can say like land, and here like cash receivable, and here land, and still I can post it under the service revenue.
No. Selling land is not your sales. Sales means the normal course of business. So your normal course of business is selling services, not selling land. Selling land is just a one-time activity. That is not the sales. That is not the core of your business. You understand? Not the business operation.
Okay.
Okay. So if you sell the land, that would be not the sale. That would be the land decrease and cash increase. No sales over there, because that is not the business operation of your business.
Okay.
Understand?
Yeah, I got it.
Now, David gonna answer this question. Paid cash expenses. David.
Yes, sir.
Now, which accounts are going to be used here?
So, like, you mean the name of the accounts or what exactly?
Yes, the name of the account.
Right.
So paid cash expenses.
Oh, okay. So, paid cash expenses. Stockholders' equity.
Why equity? Okay, let me explain this. So I already told you that a transaction at least hit two accounts, right? So this transaction is hitting not the two accounts, this at least hitting more than two accounts. So paid cash, you already paid cash, so cash is going to increase or decrease, right? So how much total of the rent or total of the expenses? 2,700, right? 1,100 rent, 1,200 salaries, and 400 utilities. But business or in accounting, we cannot make a combined entry. A combined entry looks like we paid cash, expenses, because these are expenses. Expense increase, debit. Cash decrease, credit. So expense to cash, 2,700, 2,700. We cannot make this combined entry. Why? Because we don't know, in this case, when we put into expense, this even we post this entry into a ledger, 2,700, then here we don't know that which portion belongs to rent, which portion belongs to salary, and which portion belong to utilities, right? So the better is that we segregate this expenses. So either we can make individual entry or either we can make a combined entry. So how we make individual entry? First, paid expenses. Remember, you paid expenses, right? So this is not a liability. You paid. It means this is expenses. You already paid. When you paid that, cash decrease, right? Cash decrease mean credit. Against rent, rent is your expense. So rent expense increase, which means debit. So entry would be rent expense to cash, 1,100. Next, paid cash, employee salary. So employee salary to cash. These are individual entries. Sorry, must not be, it must be. And then we have utilities expenses to cash, which is 400, right? These are called individual entries. We can also make a combined entry. And how we can make that, you think? So by looking at here, you see cash is credited in every entry here, right? Cash is credited, cash is credited. You can make an entry like this: rent expense, employee salary, utilities to cash. So by doing this, what you are essentially doing, you are just combining these credit side, cash, that's it. The debit side remains the same. Rent expense, rent expense, employee salary, utilities expense to cash. Rent is 1100, salary is 1200, utility is 400 to cash, total cash is 2700. By doing this, your entry is balance. So let's look at very nice explanation here. Rent expense, salary expense, utility expense to cash. So if you don't believe me, you can also balance it out. So if you add all these, debit side, you add the debit side, it is 2700. And you add all the credit side is also 2700. So in that case, equation is balanced, right? Done? Guys, you understand that?
Yes.
Hey, Jim,
Yes. Yes.
right? Junpyo,
Yes, we got it.
Minsu.
Yes.
Yes, sir.
Good, 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 good. So we call this combined entry. Okay, now, how we are going to post this? So we open each expense account, right? In cash account, we already know that we already make a cash account. So how we are going to post it? We post the cash entry here, 2700, and again 6. 6 is here. Rent expense is now debited. See, debit side, so we write it down on the debit side. That's it. For reference, we put 6 here. Right? So how we know that where this 1100 came from? You go to the 6th transaction, you find it out through journal entry that among this 2700, right? Among this 2700, this 1100 belongs to. Okay, my system is a little bit. My system is hanged. No, among this 2700, 1100 belongs to the rent expense, right? Okay, guys, just stop recording here. I need to again. Okay. And now our 7th transaction is paid 1900 on account created in transaction 3. So from transaction 3, you paid basically We don't need this. This is just for reference. This is the transaction. You paid 1900 on account payable. So which two accounts are going to be used in this transaction? Number one is account payable. And since you paid, it's cash. So can you pronounce the entry? So accounts payable decrease or increase?
Increase.
Decrease, buddy.
Increase.
Paid. You paid your debt.
Oh yeah.
So
Yeah.
we have less
You paid
debt
your
now.
suppliers, right? You paid, cash is decrease, accounts payable is decrease. So decrease in liability, debit, decrease in asset, cash decrease mean credit. So what is the transaction here? Accounts payable to
Cash.
cash. Very nice. Here we go. And you post it out. So these are the posting here. So why we don't create a new cash account? Because we already have cash account created before. So that's why we just post it here. So you see, figures are building up in credit side and debit side of the cash. Let's talk about the 8th entry. Wait, we don't have the 8th one. It's the 9th one. Okay. The 9th, or maybe these are the April, 9th April. Okay, whatsoever. Receive 1000 on account. What does it mean? Which two accounts? Agent.
I don't know what you mean by account. Is it cash? No.
Of course, you received 1000
Okay.
on account. It means $1,000 you received on account means
That's the part I was confused at.
Is it
Accounts
cash and
receivable.
revenue?
on
It's
account.
Receivable.
Yes, on account means
Okay. Yeah.
on account means that you received from your those people who owe to you 1000. And who are those? Your customers. So if the question says paid on account, it means you pay to those who you owe to them. So normally you pay to your suppliers, which are accounts payable. So customers are called accounts receivable and suppliers are called accounts payable. If the question says received on account, which means the customer paid you the amount they owe, or the real entry is you perform services, you performed or you sell your services to the customer agreed to pay you later. So this is the later payment. Ajam, understand?
Yes, sir.
Okay, good. So we already know that now which two accounts. So in this case, which two accounts are here? We receive cash, of course. Cash is going to be the account, and the on